Hey there! Are you wondering whether 2026 will finally be the year real estate comes back, or if we're headed for another correction? This video is for you. I have analyzed the top real estate publications, including HousingWire, the National Association of Realtors, Redfin, Inman, BiggerPockets, Zillow, Realtor.com, and today I'm breaking down what 2026 is most likely to look like. This is going to be a realistic, data-driven outlook so you can plan with confidence. As we've all seen, the last few years have been anything but normal. We went from ultra low mortgage rates to record inflation to the fastest rate hikes in decades. 2024 and 2025 were largely pause years with buyers waiting, sellers kind of locked in, transactions at historic lows. 2026 looks like it will be different. Most industry experts agree we're looking at a reset year, not a boom, not a crash, but the beginning of kind of a slow recovery. Let's start with the biggest question, mortgage rates. Across major forecasters, the consensus for 2026 is that rates will trend slightly lower, but are not going to collapse. The average 30-year fixed rate is expected to land somewhere around 6.2% to 6.4% for most of the year, with a chance that we could end 2026 closer to the high 5 range if inflation stays under control. And this matters because the market doesn't necessarily need 4% rates to function. It really needs stability. When buyers stop fearing for the next spike and sellers stop waiting for perfect conditions, you're going to have steady market activity. Next, let's talk about how many homes are actually predicted to sell in 2026. So forecasts vary widely. Some optimistic projections suggest sales could jump by double digits. Others are far more conservative. I am in that conservative camp. The most realistic middle ground, industry experts say you can expect existing home sales to rise about 5 to 10% compared to 2025. That's not a frenzy, but it is a meaningful recovery from historically low transaction levels. In practical terms, it means more showings, more accepted offers, and more buyers who finally feel confident enough to move. Now, let's talk about prices. And this is where nuance really matters. So nationally, most forecasts for 2026 cluster between 1% and 3% appreciation. That's modest growth, basically keeping pace with inflation. But it hides really big differences in individual markets. Areas with strong job growth, limited land, and affordability relative to income are likely to outperform. On the other hand, markets facing high insurance costs, heavy investor ownership, or overbuilding may see flat or even slightly declining prices. The key takeaway is 2026 will be a market of micro trends that are very specific to local markets. Pricing strategy in your local market is going to matter far more than national headlines. One of the biggest reasons prices haven't fallen dramatically is our level of inventory. That will not change overnight. Millions of homeowners are still sitting on mortgage rates in the 2 to 4% range. Even in 2026, most forecasters suggest inventory only improves gradually, roughly 5% to 10% more listings nationally. What finally brings listings back isn't rates alone, it's life events, job changes, growing families, divorce, retirement, all the things that drive real estate decisions. That means we're likely to stay in a structurally tight market, even as other conditions improve. One group that continues to benefit in this environment is builders. New construction remains competitive because builders can offer incentives, rate buy downs, closing cost credits, things of that nature that resale sellers typically just can't offer at the same level. In many markets, new homes will continue to capture an outsized share of buyers in 2026. If you're a buyer, this is a segment you cannot ignore. If you're an agent, builder relationships will matter more than ever. So here's the big picture for 2026. Mortgage rates slightly lower. Sales volume up but not explosive. Prices, modest growth nationally, very local outcomes. Inventory improving slowly, but still tight in some markets. So 2026 is not going to be about timing the market, it's about understanding it. If you're a buyer, seller, or investor, strategy is going to matter more than waiting. So cheers to 2026. If you found this breakdown helpful, please like the video, subscribe, and give me a comment about the market where you are, or if I can answer any questions. We'll see you soon.